All right, guys, welcome back to the channel. It's Tim here. First of all, thank you to all the new subscribers. I really appreciate the support. It gives me motivation to keep going, making some good quality content for you guys. So the purpose of this video is to just talk about RSI and divergences. I see a lot of new traders especially don't fully utilize the RSI. They kind of just look at it, disregard it, and some don't even have it on their charts. But for me personally, it is the main indicator I use. And if I only could use one indicator while trading, I would 100% choose just the RSI. So I'm going to show you how to read divergences, whether it be bearish and bullish. I'm going to explain what the RSI is and how it works. And then I'm going to show you the custom RSI indicator that I use. So let's get right into it. So right here we have our Bitcoin chart, right, on the daily time frame. And what I'm going to do is I'm going to add the RSI indicator. So this right here is just going to be the basic standard RSI. I'm going to teach you how to read it first, and then I'm going to show you the custom indicator I use. So this yellow line, it's just a moving average. It's not important. This right here is the actual RSI. And so what RSI is it measures momentum, right? So how it does that is it measures the volume on the pushes up or down. So for example, when this number is high on the RSI and high is considered above 70, that means that the momentum is very, very strong and it's overbought. So you can kind of expect a reversal soon when it's very, very high, especially on the time frames of 4-hour, daily, and weekly. Then same thing if the RSI is low, and low is anything 30 and below, that means there's not much more momentum, that means there's a lot of momentum to the downside and no buying momentum, right? So that's just the broad aspect of it. We can get a little more complex, and we will in a second. But what I also wanted to point out is that the RSI changes on every time frame, right? So we can go down to the 1 minute, and this is just today, and this thing is going from very, very oversold all the way to overbought and back, up and down, up and down. So just like any other indicator, it's not as effective on the tiny, smaller time frames, right? So as we get into the 15-minute, as we get into the 1 hour, as we get into the 4-hour, that's where it matters the most. So in Elliott wave theory, 1 hour RSI is actually the most important because you have to see whether it breaks roots, whether we're in different cycles, and that's a video for another day. But essentially, the higher time frame RSIs matter the most. And when you're on the weekly time frame like this, and you see something like very, very overbought, that's when you kind of want to be on the lookout, right? So now we're going to talk about bullish and bearish divergences, okay? So I'm going to show you a few examples, and then I think you'll start to understand what I'm talking about really quick. But these are very, very important. I do not enter a trade unless I see some sort of bullish or bearish divergence on at least the 15-minute time frame or hour time frame. And if it's a 4-hour divergence and it's hit my target, then I'm for sure entering. So I always recommend this indicator. So let me just show you how it works real quick. So right here, back in April, Bitcoin hits its all-time high, right? That's $65,000 on Bitcoin, right? You can see right here, the RSI is hovering at about 71, 75 range right there. Price comes down, price breaks the all-time high, right? We have a higher price on here, so I'm going to annotate that with this trend line. Price breaks the all-time high, yet on the RSI you can see right here, we don't actually break that top on the RSI, right? So what is this telling us? It's telling us the momentum of volume and buying at $65,000 in April is more momentum and volume buying than in November at our all-time high, right? So that means less institutional large money is actually buying up here than over here. And this is bearish, right? So that's what we call a divergence. And a divergence is where we have a higher high in price, but a lower low in RSI, right? So these trend lines are opposite, right? And then the other thing is this actually even hit our target right here, 1.23 touch. So if you were like our group, you saw that 1.23 touch on the weekly, you saw the bearish divergence, and then you caught the short at the top, right? So now I'm going to show you an example of bullish divergence, okay? So I'm going to hop on to a smaller time frame right here. Let's go on this beautiful pump, right? This pump was 135% pump. Wow. So you might be spotting it already. So a lot of people go and do their RSI based off candle body closes. So I personally like to do wicks. I include the wicks, but traditionally you just do candle body closes. So for this example, I'm going to use the traditional candle body close method, right? So right here, you can see this candle closes at 36,731, right? You can see on the RSI, it is extremely oversold. It is at 22, right? That's very low. That means strong downside momentum. No one is buying, but that also means it's very oversold. Hence, price should not keep dropping too dramatically after this, right? So now you can see we range for about a month or two, and then we come back down below that candle body close, right? So we get a candle body close right here at 29,700. That is dramatically lower than this candle body close of 36,000, right? So I'm going to draw that trend line example again, right? So price is descending like this, right? Yet when we look at the momentum on the RSI is 34. It's about 15 higher than it was down here at this price. So we have a lower price, yet less smart money, people that can actually move the market, is selling. So in this whole period of time, we've been going down in price, yet the RSI has been going up, right? So see those two opposite trend lines again? That indicates that, hey, we're probably going to get a move up because smart money is buying. And check that out. Once this RSI divergence was confirmed, we got our nice big green volume candle and we just exploded up 130+%, right? So that's an example of bullish divergence. So now that you kind of understand the divergences, I want you to put this on your chart and start looking at them. Start trying to spot them, maybe even on the 1 hour, you can see, hey, where are the divergences? And for me, I can spot them really quick. Like right here, for example, on this pump up, we caught the short. This candle body close is much higher than this one, yet the RSI is lower. So we knew this was bearish. We hopped in the short here and caught this entire move down. When other people were probably longing, they're thinking, oh, we just broke this, we're breaking out. Yet they didn't even look at the RSI. And if they did, they would have known this pump was short-lived, right? So really use just the normal RSI indicator to train your brain to look for it. But then after a while, I would really recommend this one. It's called the Relative Strength Index Divergences, and it's made by someone named Libertas. So, oops, let me just add that to my chart right here. And let me show you the settings I do. So I uncheck this, I check hide pivots, and I check shorter labels. But just so you can see, it tells you where the bullish and bearish divergences are. So I don't need this, but I really like using this just because it tells me, hey, bullish divergence, bullish divergence, bullish divergence. Like, it just tells me immediately when I open my trading view in the morning, hey, did we get a bullish divergence overnight? Like, what happened, right? So you can see on here on the daily, it is very accurate. It tells us, hey, these divergences are here. You know, you can see it with the naked eye, but it just tells you exactly where they are using the algorithm that Libertas programmed. So it's a really nice, just simple, beautiful RSI that includes bullish divergences. And you can see this one right here. Everybody's bearish, saying we're going to break the low, yet they don't notice that we're lower in price with a higher daily RSI, bullish divergence, boom, we rocket up 22%. We caught that move. So don't get super bearish when we're breaking lows without looking at the RSI. And in Elliott wave theory, a wave 3 is always the lowest in RSI. You guys can research all about that from other channels. But essentially, the example of that would be, let's say we do break these lows and RSI is way down here. That's super bearish. That means there would be no divergence, and we'd probably just hop back up and keep going lower. So always look out for divergences when we break lows and break highs, because that's the time that you want to be entering shorts or longs. You don't want to be, shorting the bottom, and divergences help with that extremely. So I hope you guys found this video helpful. Tag me in the comments or on Twitter if you have any questions about divergences. And yeah, I really appreciate the support, guys. Thanks for watching, and have a wonderful day.